In this video, we're going to go over how you can use EMAs to give yourself a trading edge. So sit back, take some notes, and let's get into it. Welcome back, everybody. We are on the TradeUI channel, and in this video, we're going to go over how you can use exponential moving averages, also known as the EMA. This is an awesome tool that's a little bit more sensitive than your standard moving average, and when we see how it really works with the chart, we can understand how we can find basically consistently moving support and resistance line that we can trade off of. But don't forget to go ahead and like this video, share, and subscribe. It really helps us grow our channel and understands what kind of content you want as a trader. And also remember that we have a Discord where you can trade with us in real time. Go ahead and click that link in the description below, and you can see the trades that we're getting in and getting out of at the time we are doing those trades. So the EMA, once I said, is almost like a moving support and resistance line. It's a little bit more sensitive than that moving average. Remember, a moving average tracks the different data points over a certain period of time for a stock, depending on what you choose. Most people may do 50 days, some people do 200 days, some people may do 9 days. But it's going to take that average price and plot what that number might be. We can utilize this to realize, hey, are we buying the average price of this stock, or are we selling against the average price of this stock? So if it's a bullish setup on the stock market, you can know that you can at least get in either below the EMA, or you can get in right at that EMA and realize you're buying the average price that was purchased over the past 200 days, 50 days, 20 days, whatever you choose. This tells you that you are not paying a premium for a price of an asset, but you're getting it at the average fair market value of that stock. So let's see exactly how we can pull up on the chart and go ahead and use the EMA. I have dry as an example right here, and I feel like it's going to be a good example because you see it did a lot of movement throughout this year, went up and down, pretty much traded sideways between 135 and 175. This tells me that this might be a very sensitive stock to the EMA. So if I go to studies and I go to edit study, I'm just going to type in EMA on Thinkorswim, and let's see here. It's actually not on this one. Let me type in moving average. All right, so it's right here, moving average exponential. That's exactly what EMA is. So when I click and add it, I'm going to go ahead and just to be safe, I'm going to add 2 lines. My first line, I'm going to set up for 20 days. This tells me that every 20 days or every 20 periods on the stock chart, it's going to plot a data point to give us a graphical line. And then on my next one, I'm going to go a little farther out and I'm going to do 50 days. Okay, so if I do 50 right here, I'm going to change the color to a bright orange or a bright yellow, that works. So I'm going to apply that and click OK. All right, so very similar to your standard moving average lines. However, you'll notice that the most recent price tends to be a little more sensitive to the EMA. So it tends to be a little more sensitive, meaning there's a little more reaction when we touch that line. So you can utilize EMAs the same way you use moving averages. You can actually identify first bullish setups. So when the bullish setup is when the shorter time frame crosses the longer term time frame. Remember, this blue line is our 20-day, which is shorter than our 50-day. So anytime you have a cross to where that line's over this line, that indicates bullish activity. A lot of people actually just buy the crosses. So they'll buy the stock price when it crosses, which in this case is right here, and then they'll sell when it crosses, which is roughly right in here. However, you got to remember that you're really losing a lot of opportunities to get in and get out of the markets when you trade like that. And it's not necessarily the best setup just to buy whenever it crosses and sell when it crosses. What you can do is utilize the crosses to tell you, hey, it's time for me to start entering positions. All right? That means whenever the blue line crosses above the yellow, we should be looking for bullish opportunities. Vice versa, we should be looking for bearish opportunities. And we can actually trade based off the shorter EMA. Once we get that cross, that tells us that the 20-day market is more bullish than the 50-day market. So now from this point moving forward, we should be looking for buy opportunities between this point and this point. But how do we know when to get in? Multiple ways to do that. I personally want to draw support and resistance lines first. After I do that, if I find out where the EMA is lining up with that support zone, that tells me, hey, this is a buy opportunity or a sell opportunity. You could just trade off the EMA itself, and you can see if we touched right here, it broke through the 20 and immediately bounced right back up. Touched the 20 again, bounced up, broke through the 20, broke through the 50, and bounced right back up. Because remember, we're bullish on this stock until this blue line crosses the yellow line. So anytime it goes below the average purchase price, remember that line represents the average price over a 20-day period. If it goes below that average, that's people buying at a discount, and they're going to sell at a premium when it crosses above that line. But that's just using the line itself to identify entries and exits. Let's see how it works after we draw in our support and resistance lines. So my price levels, I see a line right here, and I'm just looking right here. We had a little resistance, came to support and broke right down. And then right here, the reason I'm marking this zone here is because we had consolidation, broke down, came up, had consolidation, went up, and so we're in a range right here until we break up to this high up here. All right, so this is a great example of figuring out when is it time to buy using the EMA. All right, and this is how it all wraps up together. Bullish opportunity right here past November. Stock price goes up, breaks through that resistance, and now new resistance, or old resistance is new support. So price breaks through the EMA and then touches my support zone right here. I should be looking to buy off the support zone. Immediately shot back up to my resistance zone. That would have been an awesome short-term trade. Looks like it was an earnings trade, so that was a little tricky to get in and get out of. But right here's another example of the price broke through the EMA and came back to a resistance, or to a support zone. Support zone's here. It's below our EMA, both EMAs actually. So that tells us we need to be buying it, especially that's below the 50 EMA, because we should see the price actually pop back to at least the average. Now, as you see right here, you could debate that there's a little consolidation here, here, and here. So you could debate that this $160 level is a buy zone for this stock as well, because this 50 EMA tends to be a stronger support zone than the 20 EMA. Okay, so you could buy right there and it's shot up. All right, now, vice versa for this setup here. It's now bearish because the blue line crossed below the yellow. Stock plummeted, came back up to this zone and rejected this now resistance zone, old support zone. You see where we actually came up, tested the EMA, then broke down. So here's how we do this. If you are a bullish trader, only look for when this cross happens here. If you're bearish, only look for when this cross happens here. Don't buy every time it touches the blue line. Buy whenever your line, your EMA, is above, has made this cross, and is above, whenever your support line is below your EMA, only when you have a bullish EMA setup. Okay, that's when you buy. Vice versa, you only sell whenever your EMA has a sell setup, which is right here because the blue crossed the orange, the shorter term crossed the long term, and the price comes to test a resistance level. You got to have these things lining up together, because if they don't line up, you're just gambling. You got to have multiple justifications, and the beauty of using lines like this is you're not blowing up your chart with a bunch of technical indicators, because all these technical indicators do different things. Some stocks are more sensitive than other stocks with certain indicators. So the RSI works better for some stocks than the MACD does. The MACD works better than the Bollinger Bands for other stocks. But all stocks respect support and resistance lines, and utilizing the EMA is a very good tool to figure out if you're bullish or bearish on a stock when it gets to those support zones. So let's look at another example before we end the call here. So let's go to Wayfair. All right, Wayfair today I actually looked at earlier, but I'm going to do a big picture. So I'm going to draw my support and resistance lines, and it looks like you could argue it's this one right here. Definitely this spot right here. And you could argue that you do have one right here because you had a little bit of resistance, a little bit of resistance, a little bit of support. So you could argue that this is a less sensitive line. But this line here and this line here are your two big ones, all right? So now, just by reading the EMAs, we've identified that Wayfair technically is in a bearish setup because the blue line crossed over the orange line and we're at a shorter term resistance zone. And look what happened. If you zoom in, we touched this line and we actually started retracing already. So we already started rejecting that. It looks like we actually came down to 55.38. So let me go to the pre-market data and show you. So just like that, you can see like we came up to this zone and we started rejecting it already. We came down to a low of 55. Looks like we're coming back up to test it again, but we're already trying to fade away from it. But remember, if we go back to the year today and we look at our EMAs, it's verified that now we're looking for bearish opportunities. So you could have ran a short position here and had a tight stop targeting $50. If we look in the past, we had bullish opportunities after we got this cross right here. So anytime we got close to this line, we should be looking to buy. And as you can see, we got down to this line right here and bought. When it gets tighter, it's really hard to tell with shorter term trends. You really want to see big swings ups and big swing downs to learn how to buy. So this is a good example that W may not be the best example because you might have to say I have to draw this line up here to really justify entries. But this one here shows you that the EMA doesn't work the best all the time. And you can easily tell by back testing different stocks, right? So let's look at one more. Let's go to, I'm just typing in a random stock here. I'll type in Visa. All right, so Visa. Again, we draw our lines, drawing tools. I see a zone right here. If I can get it drawn. There we go. And then I would argue that you might have an area right here. And the reason I'm drawing that is we have consolidation and a breakup, and then it looks like we're consolidating back down. Okay, so for Visa, bullish entry right here. Looking for bulls because now the EMA crossed. Came up, tested this support zone after we already had a cross, and now we can say, hey, this is a great entry to buy, and I would end up trying to buy right here because we pulled back, got very close to that EMA, and also hit a support zone. Because remember, we're not using the EMA to actively trade. We're using the EMA to establish if it's a buy at our support zone or a potential break to the downside at the support zone. Right here's a great example of a breakdown. The price, the line crossed, indicating bearish at this point. So we expect the former support zone to fail. And right now, as you can see, it did fail. It's continuing to break down. It looks like we're going to go down to maybe 260, possibly it looks like 265 before we reverse to test it again. Couldn't tell you. I won't know until it actually happens. But remember, if you can find where these stocks cross, that'll tell you, hey, are we looking for buy or sell opportunities? So right now, Visa, we're looking for sell opportunities until we have a confirmation cross the upside. We're not going to get in on every single setup. We want to get on the best setups. So make sure you're back testing, see if your stocks actually correlate with this. That way you can really give yourself a trading edge. And the most beautiful thing we have for TradeUI is we're coming out with a dashboard that tells you what stocks are most sensitive to what indicators. Talking about EMAs, MACD, RSI. So stay tuned as that tool comes out because we're excited to launch this for everybody. That way we can all have better trading edges and really understand what stocks move the best based on their technical indicators. Guys, we're going to end the video here. Remember to join TradeUI, that link description below. We have a discount code for 10% off some of our premium access. But at the end of the day, our tools are here to make us all better traders. We're going to end the video here.